we're gonna look at more economic stuff. So this is sort of economic fallout, I guess, from the Iran war. Not really fallout. This is actually this is actually a lack of fallout. So we all know that like money is fake, right? Like money is not real. It is completely divorced from the fundamentals of like economics that, like, for instance, like the stock market was built on these market fundamentals, right? Where you needed a like a real, like a company with a real product, and like that was supposed to undergird the reality of the stock market, and the value of that company was supposed to be in some way related to the valuation of like the companies that are propping up the stock market. I think we're completely past that at this point. We are firmly in bubble territory. And the amount of like, it feels like the more financialized our economy becomes, the like the crazier the stock market tends to behave, or the more like antithetical than to like the fundamentals that the stock market behaves. So this is a video kind of about that. This is from MS Now, Steve Ratner, stock market defies war and tariff shock. So we're going to learn about how some people would say resilient our stock market is. I would say inflated with hopium our stock market is. Let's go.
U.S. stocks climbed to record highs yesterday after President Trump extended the ceasefire with Iran indefinitely. That rally comes as the stock market has remained mostly positive throughout Trump's second term, despite economic volatility around the war and the administration's sweeping so-called Liberation Day tariff hikes last year. Let's bring in former Treasury official, Morning Joe economic analyst Steve Ratner with charts on what is behind Wall Street's positivity. So, Steve, this can be very confusing to people who watch this economy.
Yeah, it's hopium, dude. It's hopium. The answer is hopium. They want it. They want the stock market to go up, and so they're all collectively pretending that that actually the stock market should be going up. And so yeah, it's the classic. It's just a classic bubble. That's what it is.
They see the jobs numbers. They see the huge inflation numbers as well.
The weirdest part is that this is not a bubble around a particular industry. This is a bubble around the entire financialized economy, like overall. The entire like S&P 500 is in a bubble. It's a bubble of just wanting, just wanting to believe that it'll just keep going up. Like that's basically that's what I think is happening. At
tariffs
least.
being,
but let's see. Maybe this guy will be able to show me some numbers to show me how totally it makes actual total sense that the stock market keeps going up right now.
See the jobs numbers. They see the huge inflation numbers as well. They see tariffs being placed on goods and services across this country. And yet the stock market continues to march upward. How does that work exactly?
Yeah, Willie, it's a mystery to a lot of people, and in some cases, even people who are professional investors on Wall Street did not predict this kind of surge. But we can take a look at graphically what's been going on. So Trump arrives. We have Liberation Day, which, as you mentioned, was a hit to the stock market. It went down pretty sharply, quite sharply, but then it just marched upward.
Well, if you want to know how this works, like, so Trump is really good at building in kind of like easing people into the hopium attitude that's necessary to get this thing to happen. So what he usually does is he does something terrible, right? Like Liberation Day, where he puts tariffs on everything up to like 50% or like insanely high tariffs. And then the stock market freaks out, and then he backs off like a little bit, right? Like down to like 20% tariffs across the board. And then all these dumbasses in the stock market who are trading say, "Oh, thank God. Okay, everything's fine. Everything's back to normal." And so they start like pretending like that 20% of tariffs like aren't there. Like they pretend like, "Oh, the economy actually is normal again." And then they just, like I said, just keep wanting number go up. And so Trump does stuff like that all the time, where he just like kind of eases people in to like negative economic, like what should be real negative economic like policy, but then he takes it back a little, Like, and then everybody's like, okay, everything's fine now, when everything isn't fine, but they just want it to be fine, and so they keep investing heavily. That's kind of, yeah, I don't know. He does that a lot though. He's done that with multiple aspects, this and the Iran war and other things.
Marched upward through the whole first year of Trump's term, into the second year, right up until the war began. And then it took another little, not so little, dive here, but then it's bounced right back to, as you say, to notching a whole series of all-time highs, which is really quite remarkable. Although when you put this in context, actually, for whatever set of reasons, the last several presidents have had a really good start to their terms in terms of the stock market. Here's Trump 2, all what you see up here, up 16.8% in his beginning of his second term. Slightly below, but very similar to his first term, actually. A bit above Biden, because Biden had to deal with COVID and rising interest rates and a few other things.
Sorry, I keep looking at this. I'm like, okay, we got Biden with a micropene, Trump with a somewhat micropene, and you got Big Dick Obama over here. Look at how big that is, man. That's 50%. Sorry. But that's me being juvenile, people. Okay, I can be a little juvenile
you
sometimes.
Look at Obama, who came in right during the financial crisis, as we remember, up 49%.
You call that a stock market boom? Look at my stock market boom.
Up 25%. So history would tell you the beginning of a president seems to go pretty well.
You know, what's interesting, though, Steve, is if you look back over the past 6 years, I guess maybe 4 years, as we were moving beyond COVID, Andrew Ross Sorkin and I always seem to have had the same conversation for the past 4 years, where we kept waiting for economic numbers to go down as interest rates continued to go up. And the macro numbers never did that. As inflation went up, the macro numbers stayed strong for the most part. Inflation went down, interest rates still up high. We kept talking about how resilient the economy was. Donald Trump comes in, all the threats about sort of radical tariff policies. And time again, the market has endured. It's moved forward despite that. As you go to your corporate earnings still being strong, try to square that. Not only what we've seen over the past year and a half with Donald Trump, but also what we saw the last couple of years with Joe Biden. How despite rising interest rates, despite inflation, and now despite tariffs, despite a stubborn 3.3% inflation rate, even now, corporate earnings still stay high in a very volatile economy.
Yeah, that's exactly remarkable. And so thanks for the lead into this chart. But as you can see here, to make your point, Joe, look how strong corporate earnings have been. And you can go back to 2024 when Biden was still president. They were going up. But then toward the end of 24, the rate of growth of earnings accelerated all through 25. And now the analysts are projecting that earnings will accelerate even more in 26 up to these high levels. And if you looked at a chart of the progression of these earnings estimates, you see that analysts are getting more and more bullish. They're actually raising their estimates of corporate earnings. So why is this happening? It's happening for a number of reasons. One of them is AI, which I'm going to talk about right down there in a second. But also, companies are tightening their belts. The weak job market that you mentioned is a function of companies really trying to slim down their workforces, get leaner and meaner, and be ready. You had the One Big Beautiful Bill, which provided some tax.
As far as I know, unemployment hasn't been going up that much, though. I mean, maybe a little bit it has been. Unemployment rate past 6 months or so. Let's see that. They got any graphs? Unemployment rate. Let's try what, 2026? That's the year we're in, right? Okay. Well, as of January, is at 4%. I'm just gonna pull this up at least. As far as I know, like, yeah, so it's higher than it has been, you know, but it's still like not like super high or anything, considering all of these companies are supposedly, you know, laying off people or not hiring, which is surprising. I don't really know what's going on with that, honestly. I'd have to like look. I'd have to dive deeper into that.
Relief to companies, and that obviously helps corporate earnings. You have a reasonably strong economy, in part because of AI. And so if you look down here, you can see this is just one proxy, one example of what's going on in the AI world. These are
Yeah, the bubble. So the AI is definitely like the biggest aspect of the bubble, but I do think our entire economy is in a financialized bubble right now. Like everything, like the entire economy. So, I think that when this inevitably pops, because it will pop one day, you can't just keep having constant like hope hope centered growth forever. It's inevitable that that has to come crashing back down to reality eventually. I think that it's probably going to be pretty bad, worse than 2008 if I had to guess.
Capital expenditures by the so-called hyperscalers, the Amazon, Google, Microsofts of the world. And you can see back in 2020, they were spending about $80 billion. Now they're spending $675 billion, 8.4 times increase in 6 years. And all of this filters through the economy in just more spending. They go out and they buy data centers, or they commission data centers. People have to go and build them, creates jobs. It creates profits for the companies that build.
Yeah, it creates jobs to build it, but then it creates like 20 jobs in the long term. Like the average data center, I think, has like 10 employees. Like it's an insanely small amount of jobs that it creates. And in exchange for those 10 jobs that it creates for your community, it gets to vacuum all of your water out of the ground and make your water bill go up like 10 times more, and then make your electricity bill like skyrocket your electricity bill, and then create annoying humming that everybody has to listen to. Yeah, that, and I don't know, just like generally make everybody's lives worse. That's what you get for those 10 jobs that it creates. Yeah, okay, cool.
Them, and all that filters back up here. So you've got a combination of tight management by companies, a reasonably strong U.S. economy, the tax relief they got, and the AI boom. And the AI boom is also helping corporate profits because companies are reporting pretty regularly that they're using more AI, and that's making them more efficient. Obviously, we get into the whole question of jobs, but for the moment anyway, AI has been a boon to corporate profits.
I don't think it's actually making anybody more efficient. I'm gonna be honest. I think that I think that's just spin. That's cope. I've read so many articles about people saying that, yeah, they fired half of our workforce and told us to use AI, but now we're just doing twice as much work. Like we're just doing two people's jobs. And so they're just squeezing their employees more. Which is, yeah, not good for employees. So let's get some more unions out there to protect those workers.
Well, I was going to say, all the things you're talking about, whether you're talking about the Trump tax cuts for corporations, if you're talking about AI, if you talk about the belt tightening, which is making corporate profits go up, all of that good news for corporations, most of that really bad news for working Americans. So there are real winners and losers in this economy, aren't there?
Well, as a matter of fact, we have a chart on winners and losers. Yep. So we can start with winners.
Yeah, it's definitely terrible it's a terrible environment out there for the working class. We us people who actually have to, contribute our labor for wages, as opposed to the people who make money skimming off the profits off of the labor surplus that we create. When it comes to us, yeah, it sucks. It sucks out there. Everything's incredibly expensive. Prices are going up. Our wages are not keeping up with even inflation or and yeah, I don't know. Everything sucks for actual workers, but for the people, for the vultures and the vampires that take all of our excess labor value and line their pockets with it to the tunes of tens, hundreds of millions of dollars, they're doing great right now. They're basically like they're getting closer and closer to like slavery levels of labor exploitation at this point, it feels like. Obviously not there yet. That's not to minimize slavery. I'm just using an analogy, people, okay?
Winners and losers among the different industries, because not all industries have participated equally in those profits that I showed you there before, or in their stock market performance, which I will show you here. So if you look at a category which we call consumer staples, this is Walmart, this is Procter & Gamble, this is things people buy just as everyday needs. Those stocks were doing quite well before the war. Since the war, they're down. Why are they down? Because gasoline prices are high and all energy costs are going up. And so the expectation is consumers are going to have to cut back on their spending on these kinds of items.
This isn't winners. This is like industry winners and losers, but this is still from a corporation perspective. It's like, I think maybe the next one I think might be actually about like the people who contribute labor. But so far, 5 out of the 6 graphs have all been about the vampires that suck all of the money off of our profits. So
airlines probably,
you can see what this guy cares about more.
consumers are going to have to cut back on their spending on these kinds of items. Airlines, probably pretty obvious. Higher fuel costs, not good for airlines. Utilities, similarly. Materials are companies that use a lot of commodities, and commodity prices generally have been going up because of this inflationary situation. And then you have the Magnificent Seven, the technology companies that we talk about, again, the Amazon, Google, Microsofts of the world. They actually had a tough first quarter because Trump put tariffs on them. And you had what was called the DeepSeek moment when it looked like China was going to be successful in AI. But then post the war, coincidentally, all those pressures came up.
I mean, DeepSeek is still out there, dude. It might be the most, I think it might be the most used AI app in existence. I mean, maybe I'm wrong about that. Maybe ChatGPT is higher, but I thought DeepSeek, especially in like Asia, where, you know, there's a lot more people, I thought was pretty prominent.
They're up. And then, of course, oil, you'd expect. They were up before, but oil companies have been up substantially since the war began. So those are winners and losers on the company side. But to get to your point, Joe, you can look at individuals, and you can see that actually individuals for the past year or so have done, on average, and you obviously have a lot of income inequality. I don't want to minimize that. But on average, earnings were running slightly above inflation. So people were getting a little more purchasing power on average. But what happened when the war started, as you pointed out?
What did I just say? And I felt this in particular in my job, where I feel like my wage is like barely, like they go up like about the same as inflation. It's like, okay, great. I'm not actually making any more money. Like, okay, you know, like this is a real problem right now.
Out was inflation goes up, wages actually were drifting, wage increases were drifting down. And so as we sit here today, consumers are really getting no benefit from this economy. They're essentially staying flat at best in terms of their purchasing power. And so when you look at the polls that you guys have been talking about so much over the last few days about Trump's handling of this and that, the economy, the war, and so forth, this has certainly got to have an impact on people's perception of his handling of the economy. They're seeing higher gas prices, well over $4, and they're not seeing their paychecks going up by nearly that much at the moment.
And oil this morning back over $100 a barrel. So those gas prices aren't coming down anytime soon. We'll see. Morning Joe economic analyst Steve Ratner.
Honestly, the price per gallon or price per barrel should probably be higher than it is if they were going to reflect the reality, as opposed to, like I keep saying, the hopium that all of these people, like the dream world that they all have to live in order to try and like wish cast the prices they want into existence. Like it really just feels in our stock market just feels so like detached from reality at this point that it almost feels about the same as like crypto or something, where there is no actual asset underneath. Like, you know, like crypto is a good example of like an asset with no actual like market fundamental value, right? And that's honestly why it has lots of like swings in price and all that sort of stuff. The stock market is supposed to be a little bit more serious than crypto. It's supposed to theoretically represent the actual value of individual companies, or in the case of like, you know, ETFs or whatever, like whole industries, right? And I just think that we live, like the era that we live in, the like, you know, gamblinification of everything has made everybody just like wish cast into the bubbles. Like the bubbles of today, I think, are going to pop a lot worse than the bubbles of the past. But who knows? We'll see. What do I know, right?